Hey everyone, I'm Larry Walsh,
And I'm Bryn Nettesheim,
and this is Channelnomics and the Margins, and we're coming to you from where are we, Bryn?
Sinsales, Spain, but not mainland Spain. We are on the gorgeous island of Mallorca.
It and when Bryn says gorgeous, she means that this is a beautiful island and out in the Mediterranean. But we're not here for the sightseeing, the
No.
mountains, or even the incredible food. We're here to talk with vendors and partners about what's going on here in Europe and across the channel.
Exactly. And
Mm,
one thing that we inevitably talk about in every conversation is the ease of doing business, right? How easy a vendor makes it for a partner to transact, bring business in, and also what they do to help retain customers, as well as the overall operational smoothness for a partner.
yeah, and that's one of the things, the big takeaways in talking with the partners here is that ease of doing business is incredibly important. Now, we've known this for a while at Channelnomics. We've tracked this for years, the significance that ease of doing business has on partner behavior and partner performance. But given the accelerated complexity of technologies, the emergence of new technologies, and particularly driven by AI, ease of doing business is becoming paramount because things are moving so fast.
It's true. And I think another factor, right, in increasing in complexity in our geopolitical climate, in our global world, is currency and the volatility of currency. And we see, of course, the biggest impact on that is the topic of quoting, right, or CPQ in general. And as partners and customers are trying to transform and evolve to keep up with the pace of change, quoting has to keep track with that as well. So what happens though when quoting is delayed is the volatility of currency is an aspect that partners are really forced to absorb a lot of risk within.
Yeah, and what Bryn is saying is true. The customer expectations for getting quotes, and this is not just individuals looking for quick turnarounds. This is an enterprise expectation.
Mhm.
They want quotes fast. They don't want to wait. And the partners,
Days.
yeah,
Days.
at
Yeah.
most, and the partners are telling us is that it can take weeks and multiple cycles or revisions in order to get a quote out, and that just complicates them in being able to set a price for their customers.
Mhm. And when that quoting takes so much of an extended period of time, the volatility of the currency then becomes the partner's operational risk to assume.
Yeah, and I think it's not even just in the coding; it's also on the back end of this as well.
Mhm.
Because what do they see happen is that every vendor has different payment terms, every customer has different payment terms and different payment expectations. And so what happens is that the disconnect, the lag time in those periods really does cause a potential risk of volatility, that the partner may be on the hook for changes in currency valuations, which then means that they can operate at a substantially lower margin than what they went into the deal with.
Mhm. Or in short terms, they have to operate like a bank.
Yeah. Yeah, very much so.
Mhm.
And it's another risk factor than in the entire ease of doing business equation is that the vendors really do have to catch up and they really do have to understand that getting things right, first time pricing, first time quoting really does make a difference. And to help with the payment terms, either by extending the payment terms where necessary, working with distributors to help ease the payment terms, or even working with third party finance companies can help.
Exactly, because I think the biggest outcome of risk then for a vendor, okay, is if a partner has to assume that financial risk, if this money is just sitting there in the gap of 45, 60, 90-day payment terms, that money is frozen. They cannot reinvest it. They cannot have that fluidity of cash flow that they need to have on hand to continue to grow businesses with their chosen vendors. And I
Yeah.
think that's that last part of the story that's really important to understand that continues to restrict the growth that everyone is looking to see.
Yeah. So, look, you're going to see more about this on Channelnomics. We have research and more best practices coming out on this. There's already information on our site about the impact that financing services can have in accelerating and moderating deals. But this is an important topic, and you're going to see more of it. Particularly, as Bryn noted, the geopolitical situation in the world. We like to say we operate globally. The truth is that it's becoming far more fractured, and that's going to cause more problems. So, look, if you like what we're doing here and in the margins, please hit like, hit subscribe, tell your friends, check out our other podcasts, Changing Channels and The Network Effect, and also check out all the services, best practices, and research we have at Channelnomics. Until next time, I'm Larry Walsh.
And I'm still Bryn Nettesheim.